Today, I want to talk about how the squeeze could happen as early as next week. Customers are pulling their cash from NYCB and their billion-dollar investment likely won't last longer than a few weeks. So stay tuned and let's make some money. Today was possibly the best day in the Millionaire Mindset trading group we've ever had. Alien Network on his first day in the group just locked in 110% gains on PBM. Jaybird also took his first trade, locking in $1,770, and today Joe locked in 190% on PBM as well. But now I want to dive straight in with the key information. So, you may have seen this article that says customers are pulling their cash from NYCB, but we promise it's no bank run. Again, the media is trying to reassure you that we absolutely promise there is no bank run happening for a second time round, but customers are panicking and pulling their deposits. It says customers of NYCB pulled $6 billion worth of deposits between February 5th and March 5th, leaving the bank's deposit base 7% lower. Remember, today is Friday, 8th of March at the time of recording this video, so actually March 5th is before the chaos actually even started. I imagine this figure has now doubled, maybe to 12 billion, maybe even $15 billion of withdrawals in the last month. So actually that $1 billion worth of investment that NYCB just received doesn't even cover a tenth of what's just been withdrawn. I'd say give it another week or two and there'll be another 10 or 20 billion withdrawn from NYCB and a bank run and collapse will have happened. But they're saying, however, the pattern is not indicative of a bank run, which these days can drain a lender of funds in mere hours. It compares NYCB to Silicon Valley Bank, which had $42 billion withdrawn in one day. But let's also remember Silicon Valley Bank had over $210 billion worth of assets, whereas NYCB only has $77 billion. So Silicon Valley Bank was many times larger. It even says NYCB provided the updated figures on a conference call Thursday morning after it announced it secured the $1 billion investment. So obviously the bad news came out on Wednesday, which was actually the 6th, not included in these figures. They basically said customers pulled $6 billion in the month up to the day before the chaos kicked off at NYCB. So that's why I imagine there was at least 12, if not $15 billion withdrawn, including March 6th and 7th. And $15 billion of withdrawals for a bank with $77 billion of assets is absolutely comparable to $42 billion of withdrawals for a bank with $210 billion in assets. You can actually see for the rest of the article, the CEO says there were people withdrawing on Wednesday, but we promise it was back to normal by Thursday. Again, not stating how much was withdrawn or how much, if anything, was redeposited. And what I also found very interesting is you may remember back to March of 2023, where First Republic Bank received a $30 billion rescue or $30 billion investment. So First Republic Bank managed to survive an extra 1 month after they were given $30 billion. So considering NYCB have only been given $1 billion, I wonder how long that will last them. Maybe a few days, maybe a week, maybe 2 weeks at an absolute maximum. If $30 billion couldn't do anything to stem the flow in First Republic Bank, I imagine $1 billion for NYCB won't even scratch the surface. Justaro has also explained why these hedge funds, including Citadel, stumping up $1 billion is actually a very bad outcome for NYCB. I also wanted to go through PBM, which I mentioned at the start of the video, where tons of people from the group locked in massive gains. We first bought PBM on the break of this pre-market high at $1.86, and it ran all the way 131% up to $4.30. I also called this stock multiple times throughout the day at the multiple different breakout points for people to take a second trade, third trade, and even fourth trade. And as you can see, the group absolutely crushed it. We also had Jack locking in profits of $3,000 on one single trade, Big Tuna locking in almost 100% gains, Jake with 65% gains, Firefly with multiple trades with 50%, 33% and 10% gains. Obviously Joe with his 190%, Jaybird with $1,770 and Alien with 110%. As I said, for both Alien and Jay, this was their first trades on their first day of joining the group, and they've absolutely profited massively. So guys, be sure to join the Millionaire Mindset Trading Group with its 100% guaranteed refund policy using the link in the description below. Firstly, it confirms the FDIC cannot shoulder any additional support anymore with its current resources. The FDIC don't have enough cash for any more bank bailouts. On top of that, no major bank like JP Morgan wanted to touch NYCB even with a 10-foot barge pole. The price of that investment, or the price of those shares issued, came at a massive discount at $2 per share, not a premium and not where NYCB is currently trading, around $3 to $4. On top of that, it's also not an all equity deal. There's some convertible debt in there, so rest assured the current shareholders of NYCB will be massively diluted. On top of that, the transaction to rescue NYCB hasn't even been signed yet, and therefore any of these 3 hedge funds or 4 hedge funds stumping up the cash could pull out at any time. Any of these 4 points could cause the deal to fall through and would cause NYCB to collapse even quicker than a few weeks. On top of that, Boss Blunt's also tweeted because another bank, SoftBank, was down 28.3% in the after hours on Zero News. He said for 3 years he's reported on SoftBank as their balance sheet has always held immense risk. He said he believes the collapse of SoftBank to be imminent. So this is 2 banks within 2 days that could potentially collapse in the next few weeks. On top of that, as Macro Edge has tweeted, the FDIC has just added 8 more banks to its problem bank list, totaling $66.3 billion in assets. So actually the FDIC is seeing another 8 banks that are also just about to collapse, as well as NYCB and SoftBank. In 2023, we had 4 banks collapsing between Signature Bank, Silicon Valley Bank, Silvergate Bank, and First Republic Bank. And now this time in 2024, we could have potentially 10 banks. On top of that, even Jerome Powell is expecting there to be bank failures from the commercial real estate crisis. Clearly, the entire banking system is in a very bad situation at the moment. Not just NYCB, but the entire regional bank sector. It looks like, as I said, the fact these rates are remaining higher for longer is really destroying all of these banks. We are going to see more bank failures, likely as soon as the next few weeks, and that will continue to get worse and worse unless interest rates are cut. But obviously, if those rates are cut too fast, inflation skyrockets again, and we're back at square one with even more problems. This will end up impacting the stock market, maybe not Monday, maybe not Tuesday, maybe not next week at all, but this will lead to a stock market crash. And obviously, when we get that crash, we also get the AMC squeeze as well. And that's why a BlackRock manager is predicting a 40% jump in those synthetic risk transfer deals. This I touched on a few days ago, and it's how banks are trying to avoid those margin requirements by shifting risk and shifting those margin requirements onto other hedge funds. And BlackRock is predicting a 40% jump in exactly these deals. It even says US money-centered banks need relief from the stringent Basel capital requirement rules. And these banks are even paying double-digit interest to hedge funds that take on some of their risk from them. So banks are willing to pay 10%, maybe 20%, maybe 30% interest just for these hedge funds to take some of the margin requirements, which to me really shows just how close to a margin call these banks and other hedge funds really are. If somebody is willing to pay 10, 20, 30% just to take some of your margin requirements, that clearly spells trouble. And BlackRock is even forecasting rapid growth for these transactions as tougher capital requirement rules take hold. it even says here actually SRTs are paying yields in the mid double digits. So is that 40% or 50% interest just to take some of the margin requirements? That actually could be even bigger than I first expected, which really shows just how screwed these banks and hedge funds really are. Paying someone literally 40% interest or even 50% interest, those mid double digits, just to take over your margin requirements. I know I've said that maybe 5 times in the last minute or two, but I don't think you understand how much of a big deal this actually is. This is the only way these banks and hedge funds were avoiding margin calls, and now they're trying to dish out those capital requirements to other hedge funds and paying literally mid double digit returns. So he tweeted saying, so let me understand this. Some AMC shareholders, some really stupid ones, sued Adam Aron, the man leading the company to 11 earnings beats in a row through disastrous circumstances, but didn't instead sue the spoofers, the naked shorters, or the shorters and distorters, allowing these scams. These people trying to raise phony lawsuits against Adam Aron and AMC didn't sue Citadel Securities, they didn't sue the mainstream media, they didn't sue those spoofers like Goldman Sachs. Instead, they tried suing a CEO of a movie theatre company who has been improving AMC as a company and leading it to 11 successful earnings beats in a row. This to me clearly shows those trying to sue Adam Aron are working for the hedge funds, trying to get AMC as a company either shut down or trying to force them into bankruptcy. Because obviously we know the only way these shorts win is if AMC goes bankrupt, which it's not going to do. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.